We're going to analyze Micron as an investment, and we're going to do it all in 90 seconds. Once again, you can thank Martinator AH for prompting me to cover Micron. He is a loyal subscriber, a member of my private group of insiders, and hails all the way from Peru. Rest assured, if you've put in a request and the company's not too small, it's on the list. Just stay tuned. And if you have a request, be sure to subscribe, click the bell, and then let me know in the comments. But let's not waste any more time. Micron in 90 seconds or less, that's why you're here. Fair warning, I'm obviously gonna go fast, so let's put up a clock and let's do this. Micron Technologies Incorporated provides semiconductor systems worldwide. As of this recording, it has a market capitalization around $69 billion and a price per share around $60. Here are several reasons you might want to consider owning Micron. Despite its recent run up around 100% over this last year, it still appears undervalued by some traditional metrics. Its PE is 7 compared to the semiconductor industry average of 24 and the market of 19. They've been trying to diversify their portfolio. As an example, they recently announced their entry into the self-driving car market to produce the specialized chips required for that market. They experienced an insane growth over this last year, up over 1,300%. Their balance sheet looks healthy, and they seem to be pretty efficient with their money, projecting an ROE over the next 3 years of about 2 times as high as the industry, and realizing an ROE over this last year of 38% versus the industry's 14%, an ROA of 25% versus the industry's 8%, and a return on capital of 31%. But here are a few reasons to not own Micron. The company's bottom line performance recently has benefited from the high net margins of around 39%, as demand and thus prices of memory chips have climbed. However, this continuing all depends on the supply-demand balance. For example, this profit potential has already led the leader in the space, Samsung, to double its capex. This will lead to an increased supply, which of course will ultimately result in prices coming back down. The memory business is a cyclical one. The last time memory prices fell, around 2015, Micron stock dropped from mid-30s to $10 per share over a 1.5-year span. So although many investors take comfort in its low PE, a company's PE ratio may not be the best metric to consider for such a cyclical company. Price to book may be more appropriate, and by that metric, Micron looks fairly priced today. And after that crazy growth last year, their earnings growth next year is projected at negative 1.8%, compared to the industry 17% and the market's 12%. So what do you say? Buy or no? Is there still more upside to this current memory boom? Has Micron done enough to insulate their bottom line should prices of the memory chips in which they currently specialize begin to fall? I look forward to continuing this discussion in the comments. If you found this helpful and would like to see more of these, don't forget to like and subscribe and click the bell so that you can keep up with all the companies we cover as we continue to help you build your rapidly growing, highly diversified net worth. I'll see you in the next one. Take care.